Our last story is from the commodities market. Oil prices are sliding, and the reasons stretch far beyond just supply and demand. The US oil benchmark has fallen to its lowest level in nearly 4 years, dropping below $57 a barrel. That's the level last seen in early 2021. Now, this fall isn't being driven by a single headline. It's the result of several global forces moving at the same time. In fact, this is not one-off data. The oil benchmark has had a rough time, falling around 20% in the past 1 year. In the past 6 months alone, it has logged a decline of over 21%. Even Brent crude futures fell 35 cents or 0.6% today. And one major factor behind the fall is renewed hope that the war in Ukraine could move closer to an end. US negotiators are offering stronger security guarantees to Kyiv in a fresh attempt to push talks forward. While a deal is far from final, even the possibility of peace is enough to move oil markets. But why does that matter? Because an end to the conflict could allow more Russian oil to return to global markets. So traders are reacting not to what has happened yet, but to what might happen next.
Crude oil fell as the market weighed up signs of optimism on a peace deal being reached between Russia and Ukraine. This raised concerns that recent U.S. sanctions on Russian oil companies would be ultimately lifted, adding to an already well-supplied market.
At the same time, another key piece of the puzzle is China. Fresh economic data suggests China's economy is losing momentum. That's worrying for oil markets because China is the world's largest buyer of crude. Even though oil use and refinery activity rose slightly in November, the bigger picture shows domestic demand remains weak. China has been leaning heavily on exports to keep its economy moving, but there are signs that strategy may be running out of steam. Add to that the rapid rise of electric vehicles across the country, and the demand for oil is facing pressure from multiple directions. All of this has outweighed concerns about supply disruptions elsewhere. Last week, the US seized an oil tanker near Venezuela, an event that would normally push prices higher. But traders weren't shaken. There's already a large amount of oil sitting in storage on ships, and China has been buying heavily from Venezuela in anticipation of tighter sanctions. That buffer has softened the impact. Zoom out even further, and the trend becomes clearer. Oil is on track for an annual loss, with global supply expected to exceed demand, not just this year, but next year too. In West Asia, a key oil-producing region, signs of oversupply are becoming harder to ignore. In terms of equities, most markets in Asia opened in red today. Tokyo, Hong Kong, Shanghai, Seoul and Taipei all lost more than 1%. In India, Sensex and Nifty also recorded losses. So now, when it comes to oil prices, many traders are now betting that prices will stay under pressure. Still, uncertainty remains. While peace talks advance, Ukraine has stepped up attacks on Russian energy facilities. There are also fresh risks in the Black Sea and growing tension with Venezuela. And any of these could change the story quickly.
They promised glory. They delivered fear. They shaped nations. They scarred generations. From brutal purges to propaganda machines, from stolen power to violent falls from the throne. Welcome to The Dictator, a series that strips away the myth and then exposes the men behind the tyranny. History remembers their power. Firstpost reveals their truth.